Perfect. So your mom told me that you are doing grade 11
Yeah.
and that you need help with accounting.
Yes.
Right. So tell me, where is the challenge so far? What have you guys and stuff like that?
We did reconciliation of the bank and the creditors. Meaning, I'm saying the bank reconciliation and the creditors reconciliation statement,
Is it?
and also
That's
the
what you guys have
and
covered so
also
far.
the internal controls.
And the internal controls. Oh, okay. Okay. Okay.
Yeah.
So did you understand the concept, or you want me to take you through it again?
The concepts I do is just the adjustments confuse me.
Oh, especially with which one, which aspect? Creditors or creditors or
Mostly
bank,
both.
or mostly both of them?
Yes, it's more like yeah in the adjustments and the internal controls.
Okay. Okay.
Yes.
Okay. All right. All right. All right. No, it's not a problem, buddy. It's not a problem. That's why I'm here. That's why I'm here. Anyways, so let me is it fine if I can refresh your memory on the concepts?
Yes.
Yeah, so that at least you know your direction of what is happening. But for tonight, I would refresh your memory on the concept of bank reconciliation. Is it okay?
Yes.
Right. So what exactly is bank reconciliation? Right. What is bank reconciliation all about? Because what you're gonna see in your exam, all right, or test that you are going to be given by your teacher, you will discover that when you talk of a bank reconciliation, they would ask you, for example, to calculate or to balance, for example, the cash book. All right. And when I'm saying to balance the cash book, what it means is they can ask you to complete information of the adjustments in your cash receipts journal, as well as in your cash payments journal. You're familiar with that.
Yes.
They'll ask you to complete some adjustments or some transactions where in the cash receipts journal and the cash payment journal. So these two, it's what makes up what we call a cash book when you're looking at a company's records.
Yes.
Number two, they would ask you to draft the bank account in the general ledger. So basically, the bank account in the general ledger that they would ask you to do, it's basically a T account, which looks like something like this. I'll show you now. Like this, with your debit side and then credit side like that. All right?
Yes.
You're familiar with that, right?
Yes.
Good. Then the third question they would ask you, they would then
It's
ask
the
you to
bank
draft
statement.
the bank reconciliation statement itself. Not the bank statement, but the bank record. Right?
Yes.
Bank reconciliation
Statement.
statement. These are the standard questions that you normally come across, correct? True or false?
Yes.
True. So as far as bank recon in general, these are the three questions you'd get. The cash book, where they want you to complete some information in the cash receipts journal, information in the cash payments journal, and then they ask you to draft a bank account, which is a T account in the general ledger, where you are transferring information from here, from the cash book to the bank account. So where, for instance, if maybe we have a positive bank account, all right, maybe, okay, 2024, somewhere in January, on the 1st, you had an opening balance, which was a good balance. all right, let's say of 25,000 rands. So if it was a positive balance, that's what you would have. And then at the end of the month of January, you would have something like total receipts, okay? Which is coming from the cash receipts journal, which they will have asked you to complete in question 1 sometimes. Okay, and let's say
Yes.
that was 100K, which is 100,000 rands. And then on the other side, you would be putting or transferring the balance or the totals for the cash payment journal, which is normally at the end of the month. So you would have something like total payments there. You're familiar with this, no?
Yes.
Right. So that's the
Oh, and
CPG.
I also get confused on when they say the bank account and the bank reconciliation is on the favorable or unfavorable.
Yeah, those things I know. They also once confused me. So I'm gonna clarify them to you because I'm pretty sure, yeah, that's probably one of the other aspects that is confusing when it comes to bank recon. But it's not so complicated. I'll explain the reasons why it can be confusing to you guys. I'll explain it to you before I introduce you to the concepts in detail. But obviously, let's assume here maybe it's the payment is 50K. Do you know how to then close this account?
Yes, we check on which side is the bigger side, which is the debit side. Then we're going to use the one on the debit side and add it also to the other side, and then we subtract it with the total payments and write it as balance carried down.
Correct.
Then on the debit side at the bottom, we write balance brought down, and we write the same amount we wrote at the
Exactly.
balance carried down.
Exactly. It's just that because of space here, I can't put that, but this balance carried down on the credit side to become a balance brought down the next month of February as balance brought down on the debit side. So you are definitely
Yes.
right. So this obviously would give you 125,000, 125,000. So how do we get the balance carried down?
125,000 minus 50,000.
Exactly, which gives you how much?
75,000.
That will give you 75,000, right? Okay, cool. It's fine. I'm doing this because I want to understand where you are struggling. That's why I started by laying out what they ask you first. So that at least I will be
Yes.
evaluating to see where is the problem, okay? But
Yes.
anyways, it's fine. So then, of course, there's something called a bank reconciliation statement. Okay, I'm going to talk about it in detail, but let me answer the question you talked about, which is to do with balances. Because you mentioned that you don't understand when they said, okay, so I want to explain about balances, okay? From different angles. So you know, when they talk about balances, you have got balances according to the bank account. In fact, can I put this in a table format to make it easier?
Yeah.
Yeah, I think table it so that you understand the differences now once and for all. So you've got balances according to the bank account, and then you've got a balance according to the bank statement, right?
Yes.
Now, the two are not the same. What is happening here, which I want you to take important note about, is their sources, okay? What is the source of these balances, okay? That's the first thing I want you to pick up. So for the first one, the source of information for the balance according to the bank account, it's your general ledger. Are we together?
Oh, and then the bank statement is the general journal.
No, it's not the general journal. The general journal, it's a record where we capture transactions. But now, so the source of the balances of bank account. So before we talk about whether it's favorable or unfavorable, question is where is this information coming from? That's what I'm trying to answer when I'm saying source of the information, okay? So
Yes.
the balance according to the bank account, normally you determine that in the general ledger, which is what I was trying to show you here. When I was saying bank account, where?
In the general ledger.
Do you see it now? So meaning to say this balance that we have just determined of 75,000, it's coming from where? From a ledger account called bank account. Do you understand? That's what I'm trying to show you. So obviously, because bank reconciliation is a month-to-month process, meaning to say, before we came to January 2024, in December of 2023, they did a bank account, the bank reconciliation process where they drafted a bank account, like something like this, with maybe an opening balance on the debit side. And then, they determine the values, like something like what we did here already. So the process happens like this almost every month, okay? So, but every month where? That's the way the question is, which is what I'm answering here. So it's happening every month coming from the general ledger, not the general journal. I will tell you why I'm saying not the general journal in the next page. Why I'm saying not the general journal, it's because if you look at your accounting process, if you look at your accounting process, here's how it works. Because I want you to understand the differences. There's something called a source document. From the source document, before I talk about the next part, source document, I'm talking about things like checks.
BS, EFTs.
Yeah. What is it? Invoices,
Invoices,
right?
credit note, debit
Credit
notes.
notes, debit notes, those things, I can tell, right? That's source documents. So it means they're supporting documents. That's what source documents means, okay? So from the source document, that you capture the information from the source documents in the subsidiary journals, okay? What are subsidiary journals? Very simple. So your subsidiary journals, this involves things like your cash receipt journal, cash payment journal, general journal, purchase, sales journal, okay, sales returns journal. You're familiar with these things, no?
I don't know the source returns journal, but the
Oh,
rest I do.
okay. I'll explain to you. Purchases journal, petty cash. You understand all of those. But I do not get too much into these details but this is just to explain to you that when you're following the accounting process, what is happening is you have source documents, then you've got journals. Except for good. Right. So then you've got subsidiary journals. So with the subsidiary journals, these are records which you use to capture the information from the source documents, right?
Yes.
Now, what you're simply recording in the subsidiary journals, you are recording something called transactions. Are we together? Now, with transactions, that's where those things called adjustments comes from.
Yes.
Do you understand? So let's say there's an adjustment that they've given you as additional information, which maybe has to do with the differences between what happened in the bank and what happened in our cash book, okay? That's where you'll be recording those information. But to be more exact, it will be in the general journal, okay?
Yes.
Or in the cash, not general journal in this case, it will be in the cash receipts journal, cash payment journal, because it's bank reconciliation we are dealing with. But now, the process does not end there. From the journals, you have to capture this info in something called the general ledger, GL, general ledger. Now, in the general ledger, because we are dealing with bank recon, that's where they will ask you to open the bank account in the general ledger. Are we together?
Yes.
They'll ask you to open the bank account in the general ledger. So what you are seeing now in there, it's no longer transactions that you are seeing in the ledger. You are now seeing something called account balances. That's what you are now seeing. You're seeing something called what? Account balances, not individual transactions. So hence, when you notice when I was drawing this this bank account, did you see that we had a balance? So this is an account balance from the previous month of December 2023, but it's an opening balance in the current month of January 2024, right?
Yes.
And then what did we do? Because all we are interested in this ledger account or in the general ledger, we are interested in accounts, balances, account balances. That's why you were asked to calculate a balance carried down, not a transaction, but a balance carried down, which becomes a balance brought down in the next month, okay, of February. So in the general ledger, essentially what I'm saying is we only deal with account balances there. Are we together?
Yes.
The general ledger. So it's different now from the general. Does it make sense? Why am I saying it's different? Because in the general, it's part of subsidiary journals where we only record individual transactions, which is supported by the source documents.
Yes.
Are we together?
Yes.
Wonderful. That's important. But now the accounting process does not end there. I'm just going to put the other parts for completion purposes, but it's not relevant for what we are doing in Bank Recon. So there's something called a trial balance.
Balance.
And then, of course, financial statements. That is the last step, okay? But these two, you're not dealing with them for now, okay? Because I'm addressing bank reconciliation. I'm only touching on 1, 2, 3, okay? For now. Right.
Yes.
Now that I've explained this, because I wanted you to understand, I explained this because I wanted you to understand where balances are coming from as far as determining the balance according to the bank account and the balance according to the bank statement. Where is this information coming from? Where do I get the balance according to the bank account? So normally it will be coming from the general ledger, which is part of your general ledger accounts. What do you see there? Account balances. That's what we see from the general ledger, right? Now, what about the bank statement? What is the source of information for the balance according to the bank statement? It's simple. The balance, you get it on the bank statement itself. That's where the balance will come from, okay? So here I'm simply saying source of balances. That's what I'm trying to show you, okay? Source of balances. Okay, so the source of the balance for the bank account is coming from the general ledger. The source of the balance for the bank statement, it comes from the bank statement itself. Are we still together?
Yes.
Right. Now, I want to explain what it means when they say the balance is favorable. What side do you reflect it? And if it's unfavorable, what side do I find it when I'm looking at the general ledger? Same story with this side. What side would this balance per bank statement be shown when I look at the bank statement? So if we say the balance according to the bank statement is favorable, which side will it be? And why is it that side? That's what I'm trying to answer for you now. Are we together?
Yes.
Okay. So I'm going to start with the first one, which is the one for the bank account according to the general ledger. So now, according to the general ledger, if I open a bank account, which I'm going to try and show you on this page, if I open the T account, bank account, or just bank, okay? We have got here the debit side, and then we've got here the what? The credit side. Do you agree with me that bank, naturally, it's an asset?
Yes.
So which side do assets increase according to the general ledger?
Is it the debit side?
Yeah. They increase on the debit side and they decrease which side?
Credit side.
On the credit side. I'll tell. Right. All right. So the decrease on the credit side, right?
Yes.
So meaning to say, if ever we have a favorable balance, it has to be somewhere on the debit side. Does it make sense?
Yes.
And if we have an unfavorable balance, it has to be where? On the credit side. Do you see it now? Why? Because bank, according to the general ledger, it's an asset. That is the reason why we are saying the bank account, according to the ledger, if it's favorable, it has to be this side. So the reason behind why we say a favorable bank balance, according to the ledger, it's a debit balance, and an unfavorable balance, according to the bank account in the general ledger, it's a credit side balance. It's because bank, according to the ledger, it's an asset. That is the whole reason behind this. So hence we are saying, you're following them?
Yes.
So hence we are saying all the time, favorable balance according to the bank account, it's always going to be a debit side all the time.
And then, so for the bank statement, it's just the opposite.
Yeah. Then for the bank statement, obviously, it's the opposite. The reason why it's opposite is because the bank does not apply accounting principles. They apply banking principles. That's the reason why. So banking principles and accounting principles, they are not the same, okay? That's why you would wonder, hey, when you have money in your bank account, they say you've got a credit balance.
Oh.
Do you understand? Like when you open your app, if you've got a bank account, when you open your bank app and you go to your bank you just go to to check your balance. If you have money in that account, it will say credit balance. Have you noticed that?
Yes.
Okay. In fact, I wanted to say, okay, let me remove this, that. Because this, it's supposed to be debit. I want to say debit. In fact, let me correct this here real quick. So this is a debit balance if it's favorable. And then this one will be a credit balance if it is favorable. Does it make sense? And then what about if it's unfavorable? According to the general ledger, it's always going to be a
credit balance.
Are we together? Why? Because if you've got a negative, an unfavorable balance according to the ledger, it means we are on a negative. So the negative side of a bank account according to the ledger, where is it? It's this side. That's where the negative bank balance would be if we are having no money according to the ledger. But if you go to the bank, if you have no money, they will say you have a debit balance and it will be showing something like minus 100 rand or something like that. Have you noticed that?
Yes.
The reason why it's because the bank use what we call banking principles. Whereas here in the ledger, we are applying accounting principles. That's the reason why there's those differences in those balances. So if they say there was a favorable bank balance according to the bank statement, you already know that's a credit balance. If they say there was an unfavorable bank balance according to the bank statement, it's a debit side. You think about your FNB app there, and you know if you have money, it means your balance will be showing as credit balance. That's what you apply if ever there's something to do with the bank statement. Why? Because the information is coming from the bank. Does it make sense?
Yes.
Right. Whereas this one, it's coming from our records, which is in the in the general ledger. Are we together?
Yeah.
Perfect. Right. So I wanted you to understand the issue about balances. That's why I was explaining this, okay? And I was supporting that with this. As
Yes.
well as this, so that you understand it better, okay? Then now,
Yes.
then you might ask yourself, but then what about this? The bank reconciliation statement. Okay, so that's what I'm about to answer for you now. So when you go to the bank reconciliation statement, I'm not sure if you guys are using the 1-column format or are you using the 2-column format? Which format do you guys normally use?
I don't actually know the name, whether it's one or two, two-way format. I don't know.
Oh, no problem. So what I'm asking is, do you guys do like maybe 1-column format, which is something like this? And then you've got details over there, something like that. So this is the one format.
Oh, we actually do the both
Both
one
formats.
when they try to explain it, and then in the test or in the exercises, we just know by the brackets, which means it's on the debit or credit side, or we're subtracting or we're adding on that one. Hello?
I was hearing you, young man. I was hearing you. Sorry, I had muted by the mic. So you're saying that you use both formats, the double
Yes,
column and the 1-column format. So 1-column, it means all the calculations will be done in 1 column. Whereas with the double column, it's something like where you have
the
over
debit
here.
and credit,
Yeah.
and
Wait,
also the total.
yeah. And then you have the totals somewhere here.
Yes,
And then you put the total for the debit should be equal to the total for the.
credit.
Do you also use this format?
Yes.
Do you understand how they operate?
Yes, actually.
Okay.
I was just confused about the favorable and unfavorable part.
Or the favorable and unfavorable part. Okay.
Yes.
So which means Moswe, now you are ready to do a question.
Just the adjustments that confuse me.
Oh, okay, all right. No problem.
They
Right.
might say that we are the business, and I'm not sure if it's like we are the owner of like the bank reconciliation statement or the one for the ledger.
Repeat again.
In the exercise or like activity, they might say maybe we are something traders as like a business, and
Okay.
then they might say we must correct the adjustments and stuff. Then I get confused whether we are the one doing the ledger or we are the one doing the bank reconciliation statement.
We do both of them as a business every month. So when you do the bank reconciliation process, right? What the bank reconciliation process involves, it would involve, first of all, you putting together your journals, which is the cash receipts journal, cash payment journal. So what would happen is, okay, I think this would help me to then introduce to you the principle of bank reconciliation. So what happens is, the process works like this. I'm going to draw 4 columns for you so that you understand it, okay?
Yes.
I'm going to draw 4 columns. So on the 1 column, this is where you have your cash receipts journal and your cash payment journal. So what happens is every month when they are doing the bank reconciliation process, so I'm going to put this as 1, then I'm going to put this as 2. So then they would receive a bank statement. I mean, you as a business, you'd receive a bank statement, okay? From the bank, right? Now, automatically, before you talk of the bank statement itself from the bank, you would have done a previous month bank reconciliation statement. So you'd have a previous month bank reconciliation statement. You would have a previous month bank reconciliation statement also. Why? It's part of your records. It's coming from the previous month. So let's say you are in the month of March. So there's a bank reconciliation statement for the month of February that you have somewhere. Does it make sense? So that is this information. So you would have all of this information in your present, so that at the end of the day, when you do comparisons of your cash receipts journal, cash payment journal against the bank statement, as well as against your previous month bank's reconciliation statement, you can be able to draft this now. You can be able to draft your bank reconciliation statement for the current month of March, okay? So this is what you are trying to draft, okay? So let's say I'm going to try to work with months, okay? Like current time that we are in. So obviously this will be for the current month of March. Where is this one coming from? This one here. This is for the previous month, which will be the month of February. Does it make sense, buddy?
Yes.
So what is happening is, for bank reconciliation process to take place, you need to compare what you have here in your cash receipts, in your cash book, basically. And you compare that against what is happening from the bank statement, which you have received from the bank. And you also compare that same information with what is happening in your previous month's bank reconciliation statement. So what you do when you're comparing this, what you're trying to achieve is, number one, you want to identify the differences. Does it make sense? You want to identify the differences. Those differences is what they call adjustments. Are we together?
Yes.
So those differences is what they call adjustments. Okay? Who is supposed to do the adjustments? It's you, the business. Why? Because you have the bank statement, which we have information sometimes which have not yet been captured in your cash book, which is your cash receipt journal, cash payment journal. So what do you do? All of that details from the bank statement, which is not here, because you would have some which is appearing from the bank statement and at the same time also appearing in the cash book. So what do you do with that? We don't do anything with those things because those are not adjustments. So when I'm saying
Yes.
differences or adjustments, there are two types of adjustments that, okay, there are several types of adjustments. Number one, you could have an omission. All right, it's supposed to be double M there. So you can have an omission, meaning to say, I have something already in the bank statement, but it's omitted here. It's not yet recorded in my cash book, right? But I can also have what else? I can also have errors. Does it make sense, buddy? So
Yes.
errors can happen where? From the bank itself. Where, for example, you want to pay AA Limited and you end up paying something like DD Limited instead of AA Limited. So question is, who has made the mistake? Is it you, the business, or is it the bank? It will be the bank. Does it make sense?
Yes.
So errors happens on the bank statement and also errors happens in the cash book. So when you're recording these transactions in your cash book from the source documents, remember, anything you are putting in the journal, where is it coming from? Source documents, which is your checks, invoices, credit notes that you were talking about. All of that information is used to capture these things here, right? So now let's go back. So what are we saying? We are saying there can be errors here in the cash book. There can also be errors where? In the bank statement. I've not yet touched on the previous record, all right? Because there is information obviously relevant from there, which can be applicable from, for us here as well. So the types of differences you're looking for, which they would give you most of the times, it's omissions or errors, okay?
Yes.
Right. So we will then obviously you need to know what to do with the omissions. You need to know what to do with the errors. That is the reason why there is need for us to draft a bank reconciliation statement for the current month, in this case, the month of March. Why? What are we doing there? We're trying to account for those adjustments, meaning to say we are accounting for those omissions. We are accounting for some of those errors. But remember, it's not only the bank reconciliation statement that you draft, you also have to adjust these things, the cash book itself, with those adjustments, meaning to say those omissions or errors. There are some things that would not be recorded here, but that have already appeared on our bank statement. We need to record them here in our cash book journals. Then you have certain information that could be appearing in our journals, but which have not reflected on the bank statement. Question is, what do you do with such information, which is here? That is why there's this statement here called a bank reconciliation statement to reconcile things that are on the journals, but not on the bank statement. We always take it to the bank reconciliation statement. Then you also have certain information from the previous month bank reconciliation statement, which under normal circumstances, if something is here on the previous month's bank recon, it's supposed to then reflect here on our bank statement if we have done those adjustments. So if you've got information from the previous month bank recon, which is now reflecting here, it means that those items have reconciled. But so for example, you have an outstanding payment here, which is not yet, which is reflected now on the current month bank reconciliation, because this the current month bank statement, the bank statement you are referring to here is the bank statement for the month of March. Does it make sense, buddy?
Yes.
It's the bank statement for the month of March. So what we want with the previous bank recon, we want to see if the adjustments that we have made here is now corrected on the bank statement. So we are saying if it is now appearing on the bank statement for the current month, those things have reconciled. But what if those adjustments from the recon are not showing up on the bank statement? What do we then do? We have to take it to the current month's bank reconciliation statement so that they will appear in the next month bank statement, which will obviously be for the month of April. Does it make sense?
Yes.
So I'm helping you to try and understand your bank reconciliation process. Now, in the next discussion that I'm going to have with you, okay, but for today, I don't want to make it too long. I just wanted to sort of like, lay a foundation for you. So what I'll do, we're going to have another lesson next week. So that's where I'll get into details about this. But for today, I wanted to lay a foundation. Is it fine?
Yes.
Did you learn something? Do you have questions?
No.
So far, so good, ne?
Yes.
All right. That's super, young man.